Good afternoon and welcome to our first pet insurance pricing webinar. Today we'll be looking at movements in pet pricing, not just for Q4 2023, but throughout the year, and how prices have moved and what that means for you. First, a little bit about us. So at Pearson Ham, we help our clients succeed through better pricing. That's our mission, and we do that in a number of ways. Through pricing consultancy, as well as market pricing data and insights, and that's what we're looking at today. So in terms of market pricing, accuracy is really key for us. There are a lot of unusual pricing rules in the market, and we have to do data cleansing to make sure that what we report is a reflection of price changes rather than price movements that could be triggered by some of the activity of collecting the quotes themselves. So we do a lot of work to make sure that data is reliable and accurate. We try and make sure that the reporting we produce is clear and actionable, and we provide expert insights to accompany that. So we provide insight sessions for our clients to help explain and contextualize the performance that we are seeing, and provide our own views on what may be driving some of the changes that we see. In terms of the methodology, so we use a panel of real consumers. So these are genuine people. It's their real names and addresses and dates of birth, and we are providing them with animals. So we make up the panel of animals to be representative of the UK market. So we get data from our partners, which enables us to create the panel that will be most representative, and we give those to the individuals. So it's genuine people, but the pets are assigned to them. We run quotes daily through Compare the Market and Money Supermarkets. So these are the largest aggregator sites for pet insurance. We have a rotation of people, so we try to mimic genuine behavior to ensure that our quotes are kind of realistic and the prices that we get back are accurate. And as I said, we do conduct data cleansing to make sure that what we're reporting is genuine price movements. The quotes that we run are designed to return the maximum number of prices. So we look at kind of minimum and maximum levels of cover, and ensure we've got a full range of those, and we capture the different cover types that are available. So we'll go in and scroll through, take lifetime, take maximum benefit, time limited. So we make sure that we get a full range of prices. In this webinar and in the presentation, unless it's otherwise indicated, what we're looking at is lifetime cover for all prices. So that would be any level of cover. So 1,000 plus would be included in there. So there are some specifics, but unless it's otherwise stated, that's what we're looking at in this presentation. Okay, so we're going to spend the next 15 minutes or so looking at price movements. If you have any questions, then please do feel free to log them in the chat. And we'll have a Q&A at the end where we'll attempt to answer any questions that might be there. And so just go into the chat function, and as we go through, just raise a question and it will come directly through to us. Okay, so how have prices moved in 2023? In Q4, we saw price increases of around 5%, so 5.3% for lifetime cover. And as I say, this is any level of cover, so it will be 1,000 annual vet fee limit or more. So that will cover everything. So it kind of takes an average of the top 5 prices. So what we're looking at here is the most competitive prices that have been quoted. And we can see most of the increases happening here in October and November, where we're getting about 2.5% each month. And this is the movement on the previous month. This slowed down a bit in December, where the increase between November and December was around 0.5%. So we have seen that inflation slow down a bit, but following significant increases in previous months. So this, I have to just say as well, is on a like-for-like basis. So there's no aging of animals between the months. So we'll maintain the same risk profile from month to month. So the policies that we're looking at here, the prices that have been quoted, are on a comparable basis. So any changes to risk profile policies will be removed. So it's only cases where everything remains the same that we will take that comparison. So it's really a like-for-like view of price changes rather than anything else that might be influencing price movements. So this brings the 6-month movement close to 12%, so 11.6% over the course of the second half of 2023. And we can see that those bigger increases starting to come through in August, September, up to 3% on the previous month. And then, as we've just seen in Q4, 2.5% coming through in October and November, and a smaller increase, but still prices moving upwards in December. So we're seeing that kind of average of 2% moving each month throughout the second half of the year. Looking at the full year, it's a slightly unusual picture. So in Q1, we're actually looking at price reductions. So the full year, we're seeing price inflation of around 13%. So very similar to the kind of the 6-month view, driven by the first half of the year, Q1 reductions, Q2 increases, and that kind of balancing itself out. So we've seen that kind of significant, I'm not sure what was happening at the beginning of the year, but significant increases coming in from April and into May, slowing down, but then creeping back up again as we get into the second half of the year. So significant premium inflation being observed throughout the year, starting in Q2, but continuing throughout the rest of the year. So taking a little bit of a segmented view on things. So again, this is lifetime cover for all levels of annual vet fee limits. Just taking a look at kind of male and female, thinking about gender neutrality that we would normally be looking at in motor and home insurance, which isn't applied here, but actually there isn't a great deal of difference in terms of pricing. So that 13% increase throughout the year is observed both for male and female pets. So I'm not sure about the kind of the differences in kind of health and risk profiles, but it's certainly not showing in terms of price differentials or price movements as we move through last year. Looking at types of animals, so we're definitely seeing bigger increases for dogs than we are for cats. So throughout the year, we're getting 14% increase in insurance pricing for dogs, which is double that of cats. So we've got 7% for cats, and we've got a 14% for dogs coming through. The price movements were kind of relatively aligned earlier in the year, and it's really since September that we've seen that variance occurring. So more focus on targeted pricing where presumably costs are impacting to a greater extent. So it looks like there's a bit more kind of sophistication creeping in terms of targeting of those price movements by animal type. Moving on to the cover type. So as I said, we've been looking at lifetime cover mainly, which is about 80% of the market, but some of the other cover levels are in here. We've got maximum benefit and time limited. So we're seeing much smaller increases for those smaller segments, and really the focus has been on lifetime. So we're seeing that 12% throughout the year with a 2 and a 3% coming through for the smaller segments in terms of cover limits. And looking at the level of cover that's provided, again, we are seeing that as a differentiator. So there's a much greater price inflation for the higher levels of cover. So for maximum cover, so 5,000 annual vet fee limit plus, we're seeing a 19% increase throughout the course of the year in prices being returned there. And again, that's over the past 6 months is kind of creeping away from the other cover limits. So again, it's where the insurers are exposed to the highest risk is where prices are increasing to the greater extent. That's true again on animal age. So looking at obviously a differentiator and a strong indicator of risk. So we're seeing much bigger increases coming through for older animals. So looking at 26% throughout the course of the year for animals aged over 6, compared to just a 1%. So relatively flat actually for those youngest animals below 1 year old. So puppies and kittens pricing remaining fairly flat, but as the animal age increases, we're seeing kind of bigger levels of premium inflation flowing through. As I said, this isn't pricing as an animal ages, it's pricing for animals of that age. So the risk profiles remain the same, they don't age throughout the year. So this is actually pricing for animals of that age rather than price inflation for animals as they age, if that makes sense. So yeah, the highest risk, older animals, seeing the biggest premium increases in 2023. Looking at breeds, we see a bit of unusual activity for animal breeds. In November, we're seeing a 22% is how it ends the year, but there's a jump of about 10% in November, between October and November. And this is kind of mainly driven by a change in the question sets for compare the market. So it's interesting to look at how differences in question sets and the options that are available can impact prices that are being returned. So what was happening previously on CTM, the first question in relation to breed would allow you to select is the animal a pedigree or crossbreed without the option of mixed breed. So what we'd like to do when we run the profiles through is take the approach of a genuine customer. So with the hypotheses that if a customer sees is a pedigree or crossbreed and they own a mixed breed or a mongrel, then they're likely to say yes, it's a crossbreed, and then move on. So I think there's been a difference in the way that CTM are dealing with that. So as I said, the previous question, the first question would be, is your pet crossbreed? Which we would expect people with mongrels to say yes, and then it would just take them through to the next stage. We're looking at the kind of the size that wouldn't give them an option around breed. That's now been clarified and giving the customer options for either pedigree crossbreed or mixed breed. And if crossbreed is entered, it now asks for a specific breed. So previously it wasn't doing that. If you select a crossbreed, it would then go to the animal size and other factors. So that change, the chart here breaks it down by Money Supermarket and Compare the Market for crossbreeds. So we've seen an increase of almost 18% between October and November on Compare the Market for crossbreeds due to the change in question. So what we're entering is the same. We're taking the same approach as a genuine customer would take, but that's the price inflation that we're seeing there due to that question change, which I think is going to be genuine, and that's going to be what's reflected in the customer experience. I'm going to take a bit of a look at the competitive landscape now by different levels of annual vet fee limit. So our clients are able to see the kind of full brand level information. So I've anonymized these for the purpose of this presentation and webinar. The insurer is numbered here. The insurer number remains the same over the next few slides, although the ranking may change. So this slide rank 1 equals insurer 1, down to rank 15 equaling insurer 15. As we go through and the rankings change, the insurer numbers relate to the same insurer, so you can see how those are moving with the different levels of cover being selected. So we can see here that the number 1 insurer for any annual vet fee limit, so this is 1,000 plus, it gets over half of the share of top positions, and that's way ahead of its nearest competitor there at 15%. We can see that prices have moved throughout the month, so that number 1 insurer dropped prices by almost 6% in the month, and that has helped its competitive position. It hasn't moved its rank, so it was already rank 1 in November, so there's no change in ranking, but it has become more competitive, so it could be gaining more share of rank 1s. I think it would have a bit of a job to do to change the rank movement when it's already at 55%. If it was at 50% or if it was at 45%, then it's not going to change the actual ranking, but it can become more competitive. So taking a look now at the next level of cover. So this is where we're selecting 2,000 annual vet fee limit or higher. So we can see that insurer 1 is still up there at the top. So this is the same insurer. It's got a significant share of rank 1s, not quite the same as it had in the previous table, but 27.6% is still pretty good. They've reduced prices again by about 6% in the month, and they've moved up 2 positions. So in November for this table, they would have been in position 3. So we've seen the insurer who's in position 3 now, who's moved down 1, and we've seen the insurer 8 who's in position 2 move down 1, and the kind of third, so insurer 10 had increased prices by 8%. So it was able to do that and only lose 1 rank position. So we can see that there's a bit more competition when you start looking at higher levels of cover. And we can see a bit of movement from insurers who were previously further down. So insurers 8, 10, 16 coming in under insurer 1. So they are obviously not competitive for the very low limit. But if it goes up to 2,000 or more, then that's when they become much more competitive. If we look at a 3,000 limit or higher, we see that insurer 1 has been knocked off the top spot. So insurer 8, who was in position 2 for the previous table, is now in top position. It's really close though. And you can see that insurer 1, again, in this segment, has reduced prices by 6% in that month and moved up 3 places. So it's gaining in competitiveness for annual vet fee limits of £3,000 or more. And we can see, again, there's a lot more competition. The mid-tables closer together than they were in previous views. As we move up the limits of 4,000 annual vet fee limit or more, we can see that the top 2 insurers remain the same, but insurer 1 again has reduced prices. So there's been price reductions for quite a few of the segments across that. Apologies, there's a timer on the light in this room, so hopefully we're back online now. So yes, we can see that there's much closer competition if we're looking at those top 5 or 6 places. So where previously kind of 80% of top quotes were within the top 3, it's now much more evenly spread, the distribution of those competitive quotes, which means there's more competition there. And we can look here at number 5. They weren't even appearing in the top 25 for the lower levels of cover. And this takes us to the maximum, so looking at 5,000 limit or more. So again, we're seeing Insurer 1 is back in there with a significant share of rank 1s, so 34%. They've reduced prices by an even greater amount than the lower levels of cover, so nearly 8% reduction in the month, increased their ranking by 2. So there's some real aggressive price movement going on here with this particular insurer, and they are kind of taking spots in the higher levels of cover. So where previously they've been very, very competitive for those lower levels of cover, they are now coming in at the higher end and starting to be much more competitive there as well. So creating a bit of a challenge for those other insurers, Insurer 8 in particular, who's kind of losing those top positions to the that particularly aggressive insurer. And then thinking about what drives the share of top positions. So it's not just about pricing, but there's also the kind of quotability element. So these charts show prices returned as a percentage of the quote request. So what kind of the actuals versus the potential. So if you run 100 quotes, return prices on 50 of them, you've got 50% quotability. So this is at product level as well, rather than the insurer group level that we were looking at previously. And this is limited to the annual vet fee limit of £4,000 for these particular insurers. So the insurers are the same. So Insurer 1, 4, 8, and 10 are the same as we were just looking at in the previous tables. But interesting to take a look at the differences in quotability. So where 1, 4, and 10 are pretty much quoting on everything that is being requested. Insurer 8 has around 50 to 55% quotability. So it has been increasing throughout the months. So October, November, December, they're quoting on more than they were previously, but it's still pretty low compared with its competitors. So what I think we can assume here is that they're very competitively priced, but they're using footprint and quote decline rules to target the business that they're most interested in. So it's not just about pricing everybody and pricing them differentially. So it's about being very cheap and targeting and only quoting where you want that business. So I think it's something which, if you are insurers 1, 4, or 10, you should be very mindful of, because if that footprint starts to expand and the pricing remains as keen as it is already, where it does quote, then that could cause some challenges in terms of being able to take more of those share of rank 1s from the other providers. So that's a bit of a summary of what's been happening in Q4, what's been happening throughout 2023. So looking ahead, what can we expect to see this year? So we're all too aware of how inflation has moved over the past year or two, and how this has impacted the vet industry and ultimately the main driver of pet insurance costs. So these are kind of ONS figures for veterinary and other services for pets for the full year 2023. So what we can see here is a 17% increase in vet costs. So this is obviously going to have an impact on insurance costs and is way ahead of general inflation and also way ahead of the 13% increase that we've seen overall in pet insurance at an average level. So what do we think is driving this? As I said, there is inflation, but the vet costs are increasing at a higher rate than inflation. There are kind of other things going on in the market which may be having an impact here, and it's something which hasn't gone unnoticed by the CMA. So a review of the vet sector has been launched, and there is a concern about consolidation within the market. We know that there are larger pet veterinary groups that are moving in and buying up independents, and that might be impacting on kind of the pricing strategies and the pricing levels that are being charged by some of those larger veterinary chains. So according to information from the CMA, independents accounted for about 89% of the UK vet industry in 2013, but by 2021, this had reduced to 45%. So it's a significant challenge, and that obviously has led to the review that is beginning at the moment. So if, as a party that is impacted by this, as a pet insurance provider, you want to get involved, then please use the link that's appearing on the slide at the moment, and you'll be able to get involved and give your views to inform that CMA inquiry. So what next for pet insurance pricing? So I think traditionally pet insurance pricing has been based mainly on the animal, so looking at the type of animal, the breed, how old it is, the size of the animal. And there's been a real focus just on that. I think what we're seeing now more so is increasing focus on the owners. So there are factors around the kind of the owner characteristics, their employment status, the jobs that they do, the amount of time that they are at home or away, which are going to impact on the health of the animal. So these are factors which, again, are starting to be introduced and used more so. There's also the kind of the living status. Where do the animals live? Where are the pets kept? So are they living in large kind of high-rise flats, or are they in houses with gardens? So again, there are other factors outside of the animal itself which are going to impact on the health and potential risk of making a claim. And then there's additional data enrichment. So what else can be used to indicate the risk of claims, and how can that be incorporated into the pricing, if at all? So I think that there's a lot of work going on at the moment, looking at, well, where are the additional data sources? What have we got already that we can use to give us a competitive advantage? And data enrichment is one of those areas which has proved very successful in motor and home insurance, and pet insurers are now looking at how can that be used, and what are the data sources that they can be looking at to improve their pricing approaches. So the outlook for this year, what are the kind of key drivers of price movements, and how do we expect it to go? So claims costs. So as we've seen, vet prices are increasing at a greater rate than both general inflation, but also premium inflation within the pet insurance market. So a rise of 17% throughout the year, compared with pet insurance at 13%. So it's clear that there's a gap there. So with all else remaining equal, prices will have to go up to address the increasing costs that we're seeing. However, if driven by consolidation, it's likely to be fairly regional, and postcode based pricing may enable some kind of advantages there. So it might be key to be able to target where those increases need to be made, and where you can be more competitive. Pricing innovation. So I think we can expect to see a bit more sophistication in vet insurance pricing, pet insurance pricing. Additional factors could be identified and included in the pricing models, the owner, the property. Other characteristics could provide significant differentiators. So I think that there is work ongoing to try and identify those and build those in to pricing models. Data enrichment, as I've said, third-party data enrichment could become more widely used. So this could relate to postcode and location, and it could provide a greater insight into owner characteristics and lifestyle, which could impact on the likelihood to claim. And again, finding significant factors that competitors are not using could provide that advantage that gives you a bit of an edge. So we're likely to see more dynamic pricing, I think, as sophistication increases, so more test and learn activity, that becoming more common. Insurers may try new approaches, so test sales for limited periods. The number and frequency of price changes, I think, could increase as we see more of this sophistication and testing activity going on. So, however, as this evolves, I think there's going to be great value in being able to track what's happening in real time and understand competitor strategies and tactics and what are they doing, and to formulate appropriate responses. So this is where our data and insights can help and perform an essential role in your market pricing strategy. So please, if you would like any more information, then please feel free to contact me directly, and I'd be happy to answer any questions that you might have. I think we've actually reached the end. I was expecting to finish a bit earlier. So if there are any questions in the chat, then I will respond myself by email, and I'll answer those directly. But in the meantime, I hope you found the webinar informative. And if you have any questions, do please feel free to contact me directly, and I shall look forward to the next one coming up in 3 months' time, when we'll be looking at price movements in the first quarter of this year. Thank you very much.